Right, last few people coming in. Happy Tuesday, everybody. Hope the week's going all right. Those people in Rocket, seriously.
Woo!
I knew it was a good trade. I just sold out too early. What's it done today? 60%? Well, there we are. What can I say? Lesson learned. My own lesson learning myself. So I'll take a slap on the wrist for that one, should I? But hey, I got out for good reasons. Right, there is past. Let's hit a record button. Pause, stop recording. Are we already recording? We are.
Yeah, I'll set it to record to start.
All right. Okay, you can trim the start off that one. Right, good evening, everybody. Hope everybody is good. Let me share a desktop. I've got all sorts going on tonight, so it may work, it may not work. Because we're going to talk about a number of different things. Asked a few questions, what people wanted to hear. So I'm going to talk a little bit about some ETFs, some ISAs, what to look at with ETFs. Are ETFs even a good thing? Marcus Cope then is going to jump on and do a little piece about single-use blockchain. Now, I don't want this group to turn into just a crypto group, because that's not what it is, and it was never designed as that. Basically, but crypto's taking the headlines at the minute, isn't it, because of what it's doing. And it's kind of hard to ignore that, if I'm brutally honest. And I feel you'd be foolish to ignore that if you haven't, like I've always said, have an exposure to it. And when I say an exposure, that obviously should be just a proportion of your portfolio and not a significant portion. Because remember, crypto still, even though, and we'll talk about this later on, is starting to creep from that speculative piece down into a longer term hold due to institutional buying. And again, I'll touch on that later on. You still may end up being in it for a lot longer ride, shall we say, than you anticipate. And what I mean by that is those people who were in 2017 did not think the top was coming. But then when it came, they've been in the red for the past 4 years. So you've got to be able to have an emotional, everybody will have an emotional barrier where that dip drops below their emotional threshold. But we'll talk about that with crypto at the end, because I don't see that being very, I see us having a much more brutal drawdown than we've just had, but I don't see the top anywhere close. And then I'm going to do a little bit about loans and ratios. And I'm going to try and do it live. I'm going to try and share my phone screen. And I'm going to try and show people a few little things about Binance, about BlockFi, around the staking within Binance and things like that. So it is going to be ETFs. Marcus is then going to be doing a little piece, and then I'm going to wrap up with some crypto. I might talk a bit about silver at the end as well, and why we're getting a bit of a short squeeze on, it's a bit rocky at the moment, a bit of a short squeeze on silver, and why paper silver and those people who don't hold their silver may well get bitten in the arse. But we'll touch on that at the end. Right, ETFs, exchange traded funds. Let's have a little look what slides I've got. I never remember what I write in these, and I write them in the afternoon. Right, so ETFs. Okay, so that's exactly what they are. They're exchange traded funds. They differ from mutual funds in certain, in the way they're put together. Okay, basically, if you as a retail investor like you and I are going to invest in something inside of our ISA wrapper, everything I'm talking about, well, firstly, everything I'm talking about is not financial advice. Everything I demonstrate tonight is not financial advice. I'm sick and tired of people saying that I have said advice, because I haven't. This group is not big. People should not be saying that to me. Okay, I give everything that I am doing, but none of it is advice. Done. I'll not mention that again. Right, ETFs. First one was traded back in 1993, and it was purely to track the S&P 500. As I say, they differ from mutual funds, but as a retail investor, you and I should really only ever dabble in ETFs, because mutual funds are generally for larger institutions. So you may invest, say your pension may be invested in a mutual fund, but that's not you investing in that, is it? It's your pension fund. You are invested in the pension. So it's kind of one step removed. If you are doing this yourself, then you really should be looking at more the ETF angle. And to be fair, everything I talk about here should be within that ISA wrapper. you should all, for tax efficiency purposes, simple as that. Every year, we're coming up to April, you'll get a new tax allowance for your ISA. So don't ever forget that. You don't have to use it all at once. You can trickle money in. You can hold money in that ISA, so you don't need to deploy it. So it can be held within that stocks and shares ISA. Okay. You can hold money within that stocks and shares ISA and not necessarily deploy it. So you can have it there, dry powder, as many would say. So you can have some dry powder there to deploy, but it's within that ISA wrapper. What are the fees? Hopefully you should all know what you can put into an ISA. You can put in £20,000 as an adult every 12 months, the tax year in April. So if you are married, there's a £40,000 that you put in. And you can also put in £9,000 for each of your children. However, bear in mind, if you deploy funds for your children, you can't take that money back out. So unless they're 18 or they're terminally ill, they are the only two circumstances. So why I emphasize that is, let's say we are adding money into a child's ISA and your own ISA, and the shit hits the fan, and all of a sudden you need that money out. That's not liquid money. Okay, because you cannot extract that just because maybe you're in financial difficulties. There are those only two circumstances that the money can be withdrawn. So when you put money into a child's ISA, it's a fantastic wrapper for that child for when they're 18 years old. You know, they have that as a fund that has been growing and has been tax-free. It allows you to deploy more money in a tax-free manner. But always remember that it can't be used for anything else until one of those two situations. And let's hope it's the first, i.e. the hit 18. Tuesday Vino, don't judge me. Right, ETFs basically now have grown to encompass a massive array of investment choices, but they're still which aren't equal in quality. And basically the fact, and on the flip side of that, because of this massive growth in the ETFs, it's become overwhelming. Okay. The liquidity of some ETFs is in question. We'll talk about why that's important in the next slide. But it's, you know, so companies may launch an ETF, and if they don't get investors who are interested in it, and the liquidity in that ETF is poor, that ETF could be liquidated. Okay. Now, if you are one of the people who did invest in that and it gets liquidated, that's a problem. Yeah. So you don't want to be jumping into it, this new product, okay, for it then potentially to be liquidated. But there's been a phenomenal growth in the ETF area. And basically I want to talk about finding that ETF, because one of the questions that I was asked is exactly that. It's overwhelming. And it's overwhelming because there's over 5,000 ETFs currently listed globally, which is ridiculous when you think about it. And a lot of them will be in exactly the same sectors. So it might be, there'll be 100 ETFs out there that track the S&P. There'll be 100 tech ETFs out there, which are your classics, you know, your Facebooks, your Google, you basically your NASDAQ stocks. A triple Q ETF, okay, will always track the NASDAQ. So if ever you see anything with triple Q on it, that will always track the NASDAQ. But there's 5,000 of the bloody things. So where do you go? But it's given a massive, massive amount of choice. And basically they can cover everything from traditional index ETFs, equities, bonds, sub-indices, commodities, futures, mixes of everything. And you really need, as a starting block, and I've got some points that we go on to as starting blocks, instead of just being like, wow, I am overwhelmed, you need to draw yourself back down to kind of step number one, should we call it, of which I spoke about the other week, of the different styles of investing, whether that be for value, growth investing, whether that be for environmental, I can't remember the term I used, but look at the style of investing you are looking to go into. Okay, so firstly, identify where you are in that journey. Yeah. And secondly, you need to start looking at kind of ethically what you want to get involved in. Because you don't, and again, this is a common misconception, want to put all your money into one ETF. Going into an ETF is like going all in on one stock or share, but you're not, because obviously you've got the variety of what's in that ETF within that ETF, but you need to be going into a variety of them. So you may go into a tech ETF, an S&P tracker ETF. You may go into an emerging markets ETF. What differs is the percentage you're putting in all of them. And we'll talk about, again, that on the coming slides. But what I'm getting at is people have a misconception that they are just going to find a single ETF and just go balls deep in that. And that's where all their money is going. And they don't need to worry about it again. Now, to be honest, in modern time, you could get away with doing that, certainly with the tech ETFs and the S&P ETFs. But again, I would suggest that you allocate certain funds to a number of different ETFs. But we'll come on to a few tools in a moment for that. Because you've got to focus on the ones that will suit your portfolio. So if you already own a lot of, say, individual tech stocks, let's call it, you already own a large proportion of Tesla, Square, Facebook, your FANGs, okay, which a lot of people already own as their individual stocks and shares. I would probably suggest that you don't then go all in with the remainder of your portfolio on a triple Q or on a tech ETF. Maybe look at an emerging market. Maybe look at, something that tracks whatever it may be. And again, we'll look at 1,000 because there are 1,001 of them. But look at what will suit your portfolio. Now, again, the other way that you may want to be looking at this is you might just think, right, I do not want to be picking individual stocks. I want this to be a hands-off portfolio that I can just deposit £200 in every single month for my children in my child's ISA and never look at this. And again, there are ETFs to suit that. But where do we start? Okay, now most people will be like, Richard, I've just got no idea where to start with this. And you really, the first place to start with this is an asset screener. Now, I'm going to jump onto a website in a second. We're going to go through some asset screeners so you can take some websites down to look at these. You want to look at an asset screener to start with, and you can put in some criteria for that. Now, even after you settle on the types of ETFs, you then want to look at the asset classes that are inside of it. You then want to look at the fees. You want to look at a number of other things, which what I'll do is I'll talk about on the next screen. Then we'll jump into the asset tracker. You want to look at the level of assets in there. Now, if you go onto a website that talks about ETFs, they'll probably tell you that a common threshold that you want to be looking for is around 10 million. So an ETF, and this is on the ETF data sheets. Again, I'll come onto the website in a moment for this, that you should be looking for a minimum of 10 million. Now, assets below that threshold are likely to have a limited degree of investor interest. Remember what I said about 2 minutes ago? If this company launches an ETF, it's relying on investor interests to grow that ETF in order to buy larger positions in each one of the companies. So it needs that liquidity. If investor interest isn't there and they haven't got that investment, let's say it stalls at about 5 million, they are in massive, massive risk of running out of liquid capital, and therefore puts the whole ETF at risk. And ETF liquidations do happen, and they happen relatively regularly. They don't happen overnight, but they do happen relatively regularly. So what I'd suggest, if you are new to this, is to look really for 100 million, okay, not the 10. It would be like, you could use the analogy of, say, investing in a Tesla, your 100 million, and a like say a Neo as your 10 million. So a one that's solid in the field, but then you've got a speculative one to the side of the field. Now, there's nothing wrong with investing in them both. So you could look at an ETF with a large 150 million in invested assets, and then you could sit and you might have 20% of your portfolio in that. You might say, actually, I wanted this kind of little bit more of a risky play. They've only got 10 million in assets, or maybe even 9, or maybe even less. But as soon as you step below that 10, it's very, very much becomes speculative. You can allocate a small portion of your portfolio to that. So you can treat the ETFs with a risk threshold, okay, the same as you would potentially treat stocks and shares. So hopefully that makes sense. But the first thing you want to look at on a data sheet is the level of asset and how much it's there. We'll look at data sheets when I go on the website. Look how old that fund is. Now, everybody has to start somewhere, okay? So there are going to be funds out there that are sub 1 year. But if I was looking at that, something really new, some emerging market where a fund had just been launched that is, exciting to you, it resonates with where you want your portfolio potentially to go, but it's young, okay? What I'd potentially then be doing is looking for a fund of that ilk, but from a large institution, like your Invesco Perpetual. like your Fidelities or your ARK Invests, those sort of large companies, if they launched a new fund, I would have quite a lot of confidence to invest in it, even though it would be sub 1 year, just because it's under the overarching barrier of, a large institution. And again, we'll cover some of those institutions in a moment. Look at the charges, because a lot of the charges involved in these, again, are quite hidden. And if that average portfolio growth is 5, 6, 7% over a 10-year period, which is quite average for some of the average low risk ETFs. But if you're paying a 2% fee on that, that obviously erodes your profit quite significantly. So ensure that you understand what charges are there. Understand what the underlying asset is in it. So don't just go on. Again, a very common thing that I see people doing is they will simply Google current best ETFs, and it'll fire out 5 ETFs, and they've had a return averaging 10 to 15%, for the last year. 50% some of them will have had for the tech stocks, lo and behold, because we've done freaking ridiculous things in the NASDAQ. And they will look sexy, okay, because of that initial headline percentage figure that is there. And I see so many people just looking at those top 5 and be like, oh, well, that's done 50 odd %. I'm going to invest in that. And they haven't a faintest clue what is in that, okay? And, give you some of the names, like, so, you could get I used to invest in one called Invesco Perpetual High Income. Okay, simple as that, high income. When I first invested in that, I had no idea what was in it. Why was I attracted to it? Because it was called high income. Okay, and I was quite an intelligent, not as seasoned as, but I had invested, but it suited me at that time. So what I'm getting at is, do always understand what's inside of that ETF, the underlying assets. And again, you don't want to be buying too heavily into an ETF if you already own potentially the top 15 to 20% of what's in there. So if you are, and again, I'll use the triple Qs, the NASDAQ based, the tech based. If you already own your Teslas, your Squares, your Facebook, or stocks like that, and then all of a sudden you look in the ETF and that's the top holding in that, I would question whether that's a wise move, okay? Because if you want more exposure to that and you already own them, you're probably better off just buying dollar cost averaging into those positions that you already hold anyway. Consider what you want to do with the income. And again, this seems quite basic. Anybody who's ever had a dividend stock, okay, you will always be asked what you want to do with the dividend or the income that ETF kicks out. And again, look at that carefully, because again, it also depends on your age. So for me, I would always auto reinvest it because that's simply compounding. But again, you can use some of the higher growth ETFs as effectively a pension fund, okay? So where it will kick off an income that you can then go and use for your living income. But just carefully consider what you plan to do that. And always remember that if it's kicking off a dividend inside of your ISA wrapper and it's being reinvested, it is also obviously always tax-free. So you're compound growing on a tax-free basis. And the last one there is ETF liquidations. They do happen, okay? I've been in a fund that has been liquidated. You're given 2 options. In fact, I've been in 2 that have been liquidated, if I'm brutally honest. I've been one that was a forced liquidation and one that was a voluntary liquidation, i.e. the fund decided to close itself down. Now, the first one, the forced, that is was the Invesco Perpetual one. I've forgotten the bloke's name now. But he was a very famous, Neil Woodford, very famous fund manager. He's actually just coming back into the scene now, which is an interesting one, and he's just launching his own fund. Now,
they're doing a group litigation against the Woodford Fund.
Yeah, I mean, I'm still getting money back now, and that's the point I'm going to raise is you will, because the funds are insured, get your money back. Okay, so if it goes into liquidation, you will generally get all of your money back. Will you get it back with the interest, etc.? Who knows? But you will get your money back. So it's not as if you're losing that money. However, that must have gone into liquidation for me. I'm going to say probably in around the 2010 era, and I'm still getting money back from it now. Okay, so you will get it back because it comes back in very, very small sums on a kind of an irregular basis. So when I look at my Hargreaves Lansdowne now, that is still there on the left-hand side. So invest the high income fund, and it's still got, I think it's only about £400 or something is left to come back. But the point of the matter is, it's liquidated freaking God knows how many, got 11 or 12 years ago, and it still hasn't fully given me that money back. That risk is there. That was a very large fund. Every one of those things that I've just spoken about there, it would have passed the test with flying colors. Okay, so that's an irregular one. The other type of liquidations is effectively where the funds just say, you know, we're not growing, we're not getting the investor interest, we haven't lost money, but we're not getting the investor interest, we're sub 10 million, we're just going to close this down. And you'll generally be offered 2 exits from them. So the last one I got was on Hargreaves Lansdowne. I got an email from them saying this is going to be liquidated. You have 2 options. You can exit the fund now and they will offer you a figure. Okay, and the figure is generally pretty much what you put in it, or you can exit at this date at an insurance payout and it will be X figure here, but that's not guaranteed. So they give you that choice. Sometimes the wisest decision is simply to exit that fund on liquidation. But as I say, they don't happen overnight. It's not like a bankruptcy where you're going to lose your money. You'll generally get the money back. So it's not something I would be scared of if you've done your due diligence like we have spoken about. So what I'm going to do is I'm going to show you a quick bit of the websites. Ching there. Right. So things I've spoken about there. Where do we start? Right. There's 2 ETF screeners which are useful information. So justetf.com. I'll let people write that down and I'll talk through them while I have a. And Morningstar. Okay, there's your Morningstar one. So it's tools.morningstar. I'll tell you what we'll do. How do I get the chat on here? Why is the chat box not coming up? I can't see the chat. Can you see that screen, by the way, my website screen?
Yes.
Yeah, happy. I just, because I can't see the chat box, I was going to drop the. I can't see the chat box, otherwise I'd drop it in. Why can't I see the chat box? There's chat. There's chat. Right, there's
I just sent you a message, so you should hopefully see something pop in.
There's your Morningstar one for everybody, just for the website, and I'll give you that one, which is just ETF as well. They are useful. Right, so what are ETF screeners? Okay, the Morningstar one I think is a little bit easier to get around. Basically, you can go on there and you can start, you screen the 5,000 down to a few. Okay, so here, starting at the top, I only want to see 4 and 5 star rated. I only want to see UK ones. Okay, and again, you can look at that. So again, let's be sensible here. Don't be maxed out by looking at that list. You've got to have decided by this point really where you want to go with this. Do I want a tech-based ETF? Do I want a London-based ETF or anything like that? And you can screen them. Or you can go to some big institutions, and I'll mention them in a second, and you can look at what they're offering. Then you can come screen them in comparison to something else. Okay, so in this case, I might just want London Stock Exchange. I want all funds that it has. I want it in pounds. I want it on a risk rating of, say, average to high. I don't need to fill in anything else. Leave everything else blank there. There's good, and hit search. And my internet will kind of spool up and it'll give you a list. And lo and behold, that list is only 99 long. Okay, so it's actually not. So again, you've narrowed it down. Okay, it's all right. You can look at the short term, long term, high performance, but an ETF screener is good. It's a good tool to understand. This one again is very good to understand. Now, another way of doing this, rather than thinking I'm still maxed out at this, I don't understand where I'm going to go with this, is to look at your larger, if you are just want to get into ETFs, look at your larger people. And what I mean by that, you look at ARK. Okay, I really like ARK. ARK Invest. They don't have many, okay? They don't have many. That's it. And they have some quite innovative ones, which is what I like, okay? Invesco Perpetual, another good one. Fidelity, another good one. I've got them on the last page of this, and I can't really remember what's that one as well. JP Morgan have some very nice emerging market ones. Okay. So you could look at what they have. So again, we're going from the 5,000 down to just a few. So then you could look at what they've got, and then you could bang those into the ETF screener, and it will give you similar funds to that one. So it's not like you're just being sucked into a JP Morgan one. All of a sudden you can say, actually, JP Morgan's got this one, it's performed like this in the emerging markets. But actually, Fidelity have also got an emerging markets, because they might not call it emerging markets either. Remember, it's not always in that name. They might call it something different, but Fidelity might have one that does a very similar job, but it's performed better. Okay. Another good tool is this one on Hargreaves Lansdowne. Okay. A very good tool is the master portfolios. And again, I'm not suggesting you use this as the be all and end all. This is all part of your research to do this. So the master portfolio, again, very similar to the ETF screener. You can add in what you wish at the top. So I like to think I'm a little bit adventurous. I'm going to put in 20,000 in this next tax year. Okay, you can also do it as, I'm going to put in 1,000, and then I'm going to put in £200 per month. Okay. It will then give you a portfolio selection. And look what it's doing here. It's not saying whack it all in one. It's saying it suggests for you a 40% weighting there, a 20, a 20, and a 20. Remember what I said at the beginning? Okay, you don't want to put everything in one basket. Once you're on these, Hargreaves Lansdowne is a fantastic tool to give you the past performance figures. Yeah, and it will also give you the data sheet and the fund charts. Where's the data sheet on there? And it will basically, it'll tell you key features documents. It will tell you what they are invested in. Okay. But like I say, I do like ARK, and ARK are very good. So I'm just going to use one of ARK's as an example here. So the ARK here, Innovation ISA, Innovation ETF. So this is the fact sheet. Every single ETF out there will have a fact sheet, and it will give you some figures down here. So net assets. What was my figure before? Let's not look at anything under 100 million. They've got 17.6 billion. So I figure we don't need to worry too much about them. They've been in inception since 2014, so they're not under a year old. Okay, fantastic. This chart confuses a lot of people, because a lot of people are like, do you know what? It did very little in this period here from 2015 to 2020. And then obviously it's risen. But again, let's put this into perspective. If we just cut off the 2020 aspect here, you can see actually the chart now looks a lot healthier. Yeah. Why is that? Because we've been very skewed since the COVID drop last year. Okay. This is a tech-based, and it will tell you what it is. So they are 10% in Tesla, 5% Square, etc., etc. So again, we all know that it's been relatively skewed since March last year. So you want to be looking a little bit potentially further back. But again, this is just about gathering that information and that data. Yeah. And they will, and ARK, as I say, give you, they haven't got many. They are very, things like autonomous tech and robots, next gen ETFs, so they've got some really, for me, quite exciting ones. But again, don't just get sucked into ARK. Do look at the others using the ETF screeners and things like that. I think that was all on the ETF screener, Morningstar. Right, so that is all on the ETF front there I wanted to talk about. Let's jump back in here, because I should be on a commission from ARK, but the CEO of ARK, Cathy Wood, one of the only females to reach that type of position, well done to her. She is an absolute legend in the investment space. She is chief executive of ARK, and in a recent interview with CNBC, this is what she said, and I've just highlighted the things which I find pertinent. I do believe if rates would take a short turn up, now I don't particularly think they will in the near term. The only thing that would ever take rates to turn upwards is kind of almost hyperinflation, but we would see a valuation reset. That's been talked about a lot more recently. A valuation reset in our portfolios would be prime candidates. The key for me is what they would do is they would sell names which are creating losses. Now, let's look at what we've just looked at there with ARC. They are in a lot of like innovative, high growth, high risk areas, AI, you know, some of the things that she had in there. So a lot of those names are in the short term potentially loss making. If you look at the intricacies of what's in her ETFs, they are loss making. So what she said there is we'd sell names which are creating losses now, because again, we bought them, we've diversified and bought them more recently. So what you're saying there is they would effectively exit them, they would sell those names creating losing and buy their highest conviction names. And in all of their funds, it's the high level techs. Okay. So what she's saying is should simply take it out of those relatively risky ones, should pile it into, because she's got to use the money. She can't just leave that an invested ETF money sat on the sidelines. Should invest it into the more secure there, even that they may take a tumble, they're still positive at the minute, invest it there. And then as soon as it's over, invest it back out to the wider sphere. Why I find this an interesting interview from somebody of her stature is she's kind of openly saying how active they are and not scared to completely cut their losses from some companies and pile that ETF, which may be 20 companies, bring it down to 10 or even 5 in times of trouble, to then expand it when times are better again. And there's not many ETFs would do that. Most ETFs will invest in a range of companies, and that is the range of companies that you will get forevermore. So this, her ability to kind of pivot, shall we say, is quite an exciting thing. And that's why that interview gained such traction. It was only on the 20th of February, so it's a very recent interview. It was gained quite a lot of traction because it's an kind of almost an unheard of thing that
isn't that quite a high risk strategy though? Because diversification increases your chances of picking a 10 bagger, doesn't it?
It does, but it's because she's involved. She's already invested in quite high risk. So if you're investing in any of ARC, you have an appetite for risk. So all she's doing is almost minimizing that risk briefly to allow everything to show its hand, and then we'll bang it back out again. That's effectively what you're saying.
So she's de-risking the portfolio, isn't
Just
she?
for that short period of time. And as you see there, that's a little bit more of the, you know, so their strategy is betting on big biotechs in one of the things, Regen, Novatex, Takedo, deep value names, etc., etc. We will move back into our pure play names if we get into severe correction, but we'll also see the investment merit in these names. They're just not pure play names. So in essence, when all the shit is over, they'll move back to where they were. Okay, so like Marcus said, it is relatively high risk, but again, every one of their ETFs is relatively high risk. But I like them, okay? But would I be going all in on them? No, I wouldn't, okay? Again, let's use a bit of common sense here. Would use potentially a 40% into one of their ETFs, maybe a 20% into a nice little safe number, you know, from Invesco, Fidelity. I think I've got the names of, there's the ones that I would personally have used. Okay, ARK Invest, Royal London, Rathbone, any emerging markets at the moment are very good. The difference between Hargreaves and Lansdowne, okay, Hargreaves Lansdowne and 212, again, a question that gets asked a lot. Hargreaves Lansdowne fees are big. 212 is pretty much no fees, but Hargreaves 212 has a very limited spread of what you can get. So if you were going to do this and fire and forget, park money in there for a child's ISA in some very powerful funds, Hargreaves Lansdowne is potentially a good place to do it because they may not be available on 212. If they're available on 212, you'll pay less fees for it, but actually you should only be paying the fee once anyway, because the idea of this is you're parking the money and you're leaving it. So again, look if it's available on both and you can make that educated decision yourself. So that's my little chat about ETFs. I'm going to hand the floor to Marcus and I'm going to give him a screen share ability. And he's going to give you about 15 minutes. Then we're going to get on to see if I can And I think this is a very important chat because it kind of, again, everybody is hearing about the blockchain space. Nobody bloody well steal my idea about properties on the blockchain, mind. That is mine, okay? If anybody can code it,
That's already been done, unfortunately.
It hasn't.
It is under development.
Nobody's been
Yes,
successful.
it is. It's under development, definitely. Has been since 2016.
And has anybody been successful as per the article from the land registry last week? No, they haven't.
The land registry is part of it, so I'm surprised they haven't.
They published the article saying they haven't got it. They can't get all players to, and they never will get all players to sign up to it.
Right.
So you're saying that, you know, every local authority is going to openly put their searches on there when they make such a huge amount of money from charging for those searches. It will just, the theory behind it is fantastic. I think the practical application of it, I think will be, or the practical getting it done, but we'll see. Right, Marcus, you want to screen share? I will give you co-host there. You can screen share. The floor is yours, my friend.
It's saying it's still disabled, screen share. Oh, there you go. Right then. So I'm Marcus, for those that you that don't know me. So basically I'm going to talk about understanding cryptocurrencies, and they're actually just a single use of the blockchain. Now, the reason why I've done this is because as Warren Buffett says, you should understand what you invest in. And I've invested in cryptocurrencies and didn't really understand what they were. So hopefully this will help other people that may be wondering what they are. So I'm going to basically talk about the history, what is blockchain, how does it work, the applications, some terms that are commonly used and where it's likely to go. So the problem that blockchain attempts to address is the internet creates copies. So the problem with that is that you get double spend issues with assets. It's fine with emails and things that doesn't matter, but if you're sending assets, then they need a third party, an intermediary to qualify the fact that something's exchanged hands. Also, a centralized ledger, so a centralized record keeping can easily be hacked, such as JP Morgan, whereas the blockchain is decentralized. Intermediaries as well, another downside to them is they tend to slow things down, and the more that are involved, the slower the process is, such as house transactions. So if we look back at the history of where blockchains come from, it was the first initial seeds of it were in 1991 with Scott and Stornetta, who basically published an article in the Journal of Cryptography, which is basically just a journal of computer coding, how to timestamp a digital document. Because obviously when a document's sent, you want to make sure that the end user can't alter it, either forward date it or backdate it. So this was the first actual attempt and description of how to timestamp a document. And then nothing much happened until 2009, and this was triggered by the banking crisis in 2008, and a group, well, more likely it's a group of developers who, under the name of Satoshi Nakamoto, produced a paper called Bitcoin, an electronic peer-to-peer cash system. So basically they wanted a method of transferring money from one person to the other without using any intermediaries at all. And the first Genisys Bitcoin chain was laid down in 2009 on January the 3rd and has 50 Bitcoins attached to it that will never be available because you get the Bitcoins when you mine, which we'll go through in a bit, when you mine the block. So blockchain can be essentially thought of as the next generation of the internet. It's a protocol of trust, which is inbuilt. So then this is what the actual data block looks like. So this is the Genisys block, and it's actually timestamped with the New York Times headline to prove the date of generation. And that was from January 2009, Chancellor on the brink of second bailout, banks failing. So ironically, that the whole of Bitcoin is based on the original thing of banks going under. And this is what it generates. So it creates this hash code, which is what this long figure of alphanumeric code is, that basically is the data converted into something that then is time stamped and stored. So what is the blockchain. As I said, it's a trust protocol. It's a sequence of blocks or groups of transactions that chain together and distributed amongst users. So each predecessing block is built into the next block. So that's how you get the chain built. So they're not actually physically linked, but the data is linked that way. It's a decentralized network, so it's on every single computer within the network. It's incorruptible digital ledger of economic transactions, and you can use it for basically any transaction, not just financial transactions. It requires no external authority to validate or authenticate, because the trust is built into it, because you can't change it. If you wanted to hack it, you'd have to change every single blockchain in the whole chain instantaneously through every single network that was involved in every single computer that's involved in the network, which is impossible. So that's basically what it looks like. On the left, there's the Bitcoin Genisys block, and then everything rolls out from there. So how does it work? So there's 5 key concepts to a blockchain. It needs a cryptographic hash, which is basically that transformation of data to a string of alphanumeric numbers for every one. It's an immutable ledger, as I've said. So every blockchain contains the hash of the previous block. So if you change one block, all the subsequent blocks change, and the user declares that chain invalid. So it's then no longer within the continuing blockchain. It's a peer-to-peer network. So every user in the network has its own copies of the transactions, and they're all stored of the hash blocks. And it's 10 to 100 times more powerful computer-wise than Google. It runs on a consensus protocol. So every time a node's added to the blockchain, all users have to validate the block using a common protocol. If it satisfies what's called the proof of works, which we'll go into in a second, it is validated and added to the chain. To validate the proof of work, the energy cost is the equivalent to the energy used by 1 million homes. It's validation is basically what mining is. So this is how the network looks. So it's a section of nodes. They can be one or more computers, and are all interconnected and linked. So the other way that they've started is staking. So Rich is going to mention this later on. So it's proof of staking. And this is a new way of validating the blockchain. Basically what happens is you stake a minimum number of coins for a set period, and you earn the person staking earns the fee. What happens then is the coins are locked at intervals, and a coin is randomly picked to validate the block. Most use delegated proof of staking using a third party to validate, such as Binance. There's an intrinsic system. This is an intrinsic system where the digital currency is used, as opposed to a proof of works, which is an extrinsic system. And as I say, currently the Bitcoin network uses 1 gigawatt per day of energy, of electricity. The problem with proof of works is that it's difficult with scalability. So that's why the proof of staking has started to be evolved and developed. This allows the scaling process because it's not limited by any true physical world assets such as electricity. An example is the Ethereum migration from proof of works to proof of staking, and that's called Ethereum 2.0. So mining is the process of the proof of work. So it requires to add each block to the chain. It requires the user to create a code with restrictions on its hash code. Its hash code is unpredictable, and the miners have to basically do a mathematical puzzle to work out what the hash code is. The one that's successful then adds to the network, and they get the fee for doing that. Every other node then will check the validity of that particular block that's been added to the protocol. If it's legitimate, it's included into their local copy. The mathematical problem serves no purpose except to secure the network. So loads of computers are basically doing a security check by doing a complex mathematical problem that requires loads of energy. So this is basically in detail what the mining involves. So to successfully mine a block, a miner needs to hash the block's header in such a way that it's less than or equal to the target. The target at the time of writing, I pulled this off an article, is a 256-bit alphanumeric string that starts with 18 zeros. The target changes as difficulty changes every 2016 blocks. And the miners arrive at this particular hash by varying a small portion of the block's header, which is called a nonce. Ironic that. A nonce always starts with 0 and is incremented every time for obtaining the required hash or target. Since the varying of the nonce is hit and miss, the chances of getting a particular hash or target, which starts with this many zeros, is very low. It's equivalent if you think of trying to break a complex locking mechanism on a safe. So the many attempts that they must make before a miner is successful at identifying the correct sequence of nonces. And this number of attempts made per second is called the hash rate or hash power. And this hash power or guessing attempts are made by miners who mine the Bitcoin blocks by a process called Bitcoin mining. So to do it, each time you successfully mine the block, you get 6.25 Bitcoins. If you were a solo mining unit, you're going to need to do about 3,000 THs per second. So that THs is trillion. So a 14 trillion mining rig, so it's making 14 trillion computations a second, does 14 trillion calculations, as you say. So you need about 115 anti-miner S9s, which would cost about 1,288. So you need a total of $148,120 to successfully mine 625 Bitcoins a month. So 144 blocks are mined a day on average, and there's 6.25 Bitcoins per block. So basically 900 Bitcoins are being generated per day. Regardless of the number of miners, it still takes 10 minutes to mine 1 Bitcoin. And at 600 seconds, all else being equal, it'll take 72,000 gigawatts of power to mine a Bitcoin using the average power provided by these miners. And the percentage share of the network represented by the miner gives you the chance of winning that block reward. So the reward's been halving over a period of time. So there's 21 million Bitcoins in total. The 2009, when they first started mining, that's why the first Genisys block has 50 Bitcoin in it that can't be mined, because it can't generate a new hash code because it needed a preceding one. 2012, it dropped to 25, so it halved. 2016, it halved again to 12.5. And 2020, it's just halved to 6.25. So you can see it's exponentially reducing over time. So what are the applications of blockchain? So obviously the biggest one that everyone's aware of is Bitcoin, which is decentralized finance. So if you imagine normally paying how we would pay in a shop at the minute with a debit card rather, you would buy your goods, you'd then put the card in or flash it on the thing, and it'd go through a series of middlemen such as Visa, then through the bank, and eventually a settlement would be generated where the money would be moved from one account to the other. With Bitcoin, the payment and settlement is the same activity, just a change in the ledger. The other thing that blockchain is capable of doing is preventing the remittance ripoff from the flow of money from the first to the second world. So there's a lot of second world immigrants that send money home on a regular basis, and they're paying anywhere between 10 to 15%. They, with a cryptocurrency, they would be paying 1 to 2%. So less money would be lost from them earning in the first world, and so more would move to the second world or third world, depending on where they are from. So Ethereum has a stock exchange project at the minute. There's obviously protecting land titles with an immutable record, recapturing identity. So every one of us has a virtual identity that's not owned by us and is monetized. Facebook's obviously the most common one that does this, and that's why you get all those nice adverts popping up, depending on what your interests are. And so it could create a black box of a virtual you for privacy and only release information as and when it was needed, and then mop it up as well afterwards. So none of your personal information would ever be in the virtual sphere. So intellectual property is the other one that it's useful for. So for example, music can be stored on a blockchain with a smart contract wrapped around it. So the song becomes a business in itself with its own payment system, the so-called make it rain on the blockchain. So what it can do is, say you download the song, it automatically charges you, moves the money across to the artist. If you were a filmmaker and you purchase the song, it would charge you obviously a larger fee automatically, and the contract would be set up automatically, and the money would move from your account to theirs. So all contracts can be done on it, and any information you require authentication for. So for me, from my perspective, things like drug trials, It creates immutable records, so no one can ever say that they've been artificially altered. So any things like this, whatever you can think about. And here's an infogram here that basically shows some of the activities that they can do. And you work around, so obviously smart contracts for landlords. So imagine having a smart contract with your tenant. It does the credit check automatically, takes the security deposit off them and gives them a move-in date. If they stop paying, it closes so if the property was run on electronic lock, it would close the property so they had no access to it automatically. So it completely monitor them and check that they were keeping to the original contract. Obviously, there's retail, commerce, and payment movement, construction. So Builderium is connecting contractors, workers, and clients on deals around the world. There's cross-border remittances that we mentioned. Electronic vehicles. This is interesting as well. So basically, electronic taxi that goes around, charges you for getting in it automatically, and there's no interface at all bar you just moving in and out. Security and real estate ownership, what Rich mentioned before. So there's several of the things that are going on, and basically it's anything you can imagine to set it up as. So smart contracts, this is the next stage of Bitcoin, of cryptocurrencies rather, and is ETH. So it was set up by Vitalik Buterin, a 19-year-old, somewhat smart young man, and it allows smart contracts. So they also get called decentralized applications, or dApps. So the words are basically interchangeable. These self-execute, they can handle enforcement, as we mentioned, they can do management, performance, and payments of the agreement between people. They can be as complex or as simple as you want. And the token for doing the computational work for the blockchain is actually Ether. It's this that's traded, and obviously it's listed as Ethereum, but Ethereum is actually what the network is, if you want to be pedantic about the actual naming of things. So here's a traditional contract, top left. So the parties make a contract, a third party authorizes it and authenticates it, and it goes to execution. With a smart contract, this is all wrapped up in the same thing and goes through the same way. Regulators can use blockchain to keep an eye on contracts. So it's basically a binary system of yes, no, if not, then when, things like that. And that's how it moves through the contract. So here are some terms that you might hear. So hash is obviously the code, the alphanumeric code that's implanted onto each blockchain. A block is a single amount of the data that's stored. A node is any computer which is in the network or group of computers within the network. Consensus protocol we mentioned, so that's how they all have to agree that it's the correct hash code before they allow it to be added to the blockchain. Proof of works, obviously that's mining, and that's proving that the hash code is correct. Then there's proof of staking we mentioned, which is using a random coin from coins that are staked to give authentication and validate a particular block. Genisys block, that's any block that's at the start of a blockchain. A fork, this is interesting because obviously Cardano is about to undergo a fork. So there's two types of fork. There's a soft fork and a hard fork. So a soft fork is when something changes within the protocol, but the chain can continue, and it's the old chain works with the new chain, so there's no difference. A hard fork is when a new chain starts from the original protocol. And it's actually interesting because it's almost like a democracy, because if the new chain isn't taken up by the people that are interested in investing in it, then the chain will fail. And sometimes you end up with the old chain continuing, which has done in the past for different ones. Gas is basically the cost of the computation, which is what the Bitcoin miner generates. So they're saying in 2020 is the blockchain decade. So this is just some figures off the internet. So 40% of companies in the US are investing 50 million in blockchain in the coming year. 86% of USA companies are building blockchain teams. And the top three uses of blockchain currently are data validation, data sharing, and identity protection. Obviously, identity protection is a massive fraudulent thing that undergoes, and obviously proving who you are to prevent this is of great interest for security. So where will it go? So Bitcoin, there's 21 million coins or tokens. Currently, there's circulating about 18.6 million, but 5 to 10 million have been lost, either through sent to the wrong address or the hard drives have been lost. They reckon about 1 million are in super strong hands, so people that are never going to get rid of it. So Satoshi Nakamoto has a large portion, and Grayscale do as well. So the actual float, so what's available for trading, is only about 10 million Bitcoins. If it becomes popular, they reckon 1 in 5 people will own some cryptocurrencies. Currently, stocks, it's 1 in 3 to 4 people. So obviously, the interest we have in wealth gives us a very skewed perspective of what people own and what people do. So we talk about Bitcoin and various stocks and shares and stuff, but actually it's quite rare in the population. You know, you're talking less than 25%. So if 1 in 5 invests 5% of their wealth in cryptos, this gives a market cap of 3.5 trillion. Bitcoin has about a 50% share of the cryptos, which would give it 1.75 trillion. Now, that market cap is leveraged because there's other things going on. So you've got options, derivatives, ETFs, leveraged currency markets, and this basically gives you a multiplier of what's being invested and traded. So currently it's about 20 times for Bitcoin. So the amount of Bitcoin in circulation, the market cap of Bitcoins is said to be about, well, it fluctuates so rapidly, but when I did this, it was 865 billion. But actually 1.73 trillion is traded because it's a 20 times multiplier. So if we just use a 10 times multiplier and be really conservative about that new market cap that we've said, you can see how high it's going to be. And it's expected in the next 5 to 10 years. We've seen big transactions. So in April of 2020, there was a 1.1 billion pound $1.1 billion transaction, which was 161,500 Bitcoins that went through. So big investors are involved in this space now, or starting to become involved in this space now. So in conclusion, blockchain is the second generation of the internet. That's the easiest way to think about it, a protocol of trust. We actually, as investors, are in a unique position because retail investors are ahead of the curve for the first time ever, and institutional investors are only starting to join the party. And obviously, Tesla is one of the big ones that's just invested not so long ago, and Elon loves Dogecoin. Someone asked him why he liked Dogecoin so much, and he went, "I like dogs and I like memes." So that's why he decided he was backing it. So there you go, a whistle-stop tour of blockchain. And you've got to remember that that Bitcoin is just the front runner of it. It's so much more useful and so much more dynamic in what it can do, and it's going to have a huge impact on our lives. Thank you. You're on mute, Rich.
Marcus, thank you very much. That was brilliant, absolutely brilliant, and a really good rattle through. It certainly taught me a lot there. Could you just stop screen sharing, if you could? But yeah, really, really good indeed. Should I just force you to stop screen sharing?
Yeah, probably. I can't do it.
Okay.
Have you de-screened me?
There you are. Forced you
Oh,
off.
there we go. Sorry.
Yeah, no, thank you very much for that, Marcus. That was very, very interesting to me, and an absolutely solid brief on what the blockchain is. So I'm going to come back to that at the end. I do know that one. There's what I'm looking at. This one I'm looking at for as a new stock for a COVID play. Okay, it's an organization, Hive Group, run festivals. Leeds Festival's just gone on. They're gonna run this year. A lot of the others have cancelled, but a lot are going to happen. Okay, they've been battered. Okay, down to where they currently are. And for me, that's a quick play back up to 500. So again, do a little bit of research yourselves on that one. I'll put a a lot more out on that one when I next write my report, but it gives you a little bit of homework to go and do that. It's HYVE on the London Stock Exchange. Do go and have a little look. Right, this is what I want to talk to you about now. A few little things. I want to talk about crypto loans, Mu and Aave wallets. Okay, Binance, I want to do a very quick canter through, and BlockFi. So it just adds on. Again, it's crypto, and I know a lot of tonight has been on crypto. That's why I wanted to give you the quick little stock to go and look at. So it's not all crypto. You've got a little bit of homework to go and do there on that one yourself, and I'll do the full research. But for me, that's a fairly solid buy now. You may not get the rise, okay, immediately, but it's a COVID play, and I think it will recover once things start getting back to normal. Very similar to the restaurant group that we covered last week. Right, let me see the order I'm going to go through this. So Binance, this is not a lesson on Binance, okay, but I want to talk about a little bit about Binance, because I feel a lot of people get quite maxed out with this, okay? So Binance, for those of you who aren't in the crypto space, is the biggest exchange now for cryptocurrencies, where you can go and buy, sell, trade all currencies on there. This is mine. It is logged in as me, and it is a relatively confusing platform. However, what I'd encourage you to do is just not be confused by it, and only concentrate on the areas that are relevant to what you want to do. Too many people look at these screens and screens and screens of things and think, oh my God, I've no idea what I'm doing. But actually, if you just concentrate on what's pertinent to you, that's all you need. And what I mean by that is all you need is your spot wallet. That will give you a snapshot of what's in front of you right now. Obviously, all of those stars would have the relevant figures in them for what you have in that account. And it will tell you what you have. Now, the first thing that people seem to get quite confused about is the trading or the transferring into a coin. So when you deposit money into this, okay, you would simply do it under buy crypto and a bank deposit. You would be offered a screen, which is very similar to, well, it is this one that you see now in front of you. And I would select a faster payment option. You can pay by your Visa or MasterCard, but you will pay the fee. Faster payments are free. Okay, put in an arbitrary figure there of say £3,000. Click continue, and it will give you here on the right hand side, it will simply give you a sort code, account number, and a reference number. So all you're doing is you're doing a bank transfer of that figure into your Binance account. It is not immediate. It sometimes can be immediate, but it sometimes can be slow. Okay, so don't think, why, where is it? You know, I've got some of them down here, £1,000 successful took. It doesn't tell you how long it took, but it can take even up to a couple of days, especially if it's your first. But again, once you've got it, and again, some banks will stop it. TSB initially used to stop mine until I was on the phone and had to explain where that money was going. So, Spot Wallet, how to deposit money. That's so far all you need to do. You've now got money in GBP, in pounds, into this wallet. So this here, top section here, where it says fiat balance, fiat is normal currency, will simply say how much I have in. Now, if I now want to buy Bitcoin, I would simply put BTC in here, and it will come up with a coin at the bottom, Bitcoin. I would simply trade that coin. Now, what you have to find is you have to find something against GBP. Okay, so what I mean by that is I'm buying GBP I'm buying BTC, Bitcoin, with GBP. Okay, that's a simple evolution right there. Very, very simple. You would click that and it would take you to this screen here. Okay, so again, ignore all the charts, ignore everything around this. Okay, it's designed to max you out and send you off the exchange. Ignore it all. All we want to do is come down to the bottom where we are physically going to do the transaction. And we want to buy Bitcoin, okay, with however much money we've got. I have no money in this account. And see, it's got no money in this account, but that's all you want to do. Buy with how much. Now you can do it two ways. You can type in a monetary figure. So say you've deposited £10,000 and I only want to buy 2,000, I could type in 2,000 there and it will tell me how much Bitcoin I am going to get. Or I can use this slide scale here and I can simply say that will buy me 25% of my use 25% of my available GBP balance, 50%, 75, obviously it's mega slightly off, or 100%. And then you simply put buy. That then has just bought me Bitcoin from pounds. Okay, that is a relatively straightforward transaction. Now, where people get confused on this is where there isn't a denominator for pounds. So let's have a look at another common one at the moment, which is ADA, which is Cardano. I'm sure a lot of you have already heard about that. And if we look at trade here, where you can trade ADA against pounds now, let's look at.
Yeah, I did it 2 days ago.
Yeah, let's look at ZIL. There's a killer.
Reef's not against pound.
Well, there's ZIL's not. Right, so as you can see here, you have nothing against pounds. So what you've then got to do is you've got to go pounds to a stable currency and then a stable currency into the currency. So what are stable currencies? There's two listed here, the USDT, which is better known as Tether, and BUSD, which is the Binance stable coin, both of which you could transfer into. So you look at that. So the way you do this is you look at the coin that you want to buy, you look at which, because some of them may only go against USDT. So at that point, you'd say, right, I can do ZIL against USDT. So I now need to go USDT. Oh, why is it randomly corrected that? USDT, which is Tether here. And I want to trade. I don't think you can do Tether against USB. So we'll go BUSD. So you can see this is where it becomes fiddly. You've got to find what you can go against. And this is what I think maxes a lot of people out. So as you can see there, we can't even do stable coin against it. So at that point, what I would personally do is I would transfer all of my, me personally, I would go to Bitcoin and I would transfer all of my pounds into Bitcoin. So then I own, if I put £10,000 in there, I then own £10,000 worth of Bitcoin. I would then go to my coin that I wish to buy and I would go trade that.
And give it 10 minutes, Rich, so that it covers the transaction costs, because Bitcoin will have risen.
It does, yeah, it does have to. And then you would simply go exactly the same, ZIL Bitcoin, open exactly the same page up, and here you are. But you are buying ZIL with Bitcoin. Do I want to use 25% of my balance, 50, 75, or 100? And it's that little jiggery pokery that I feel gets a lot of people maxed out.
You're on 3x as well.
No, that doesn't matter.
All right.
Yeah, we're just buying it. That is on these pages. You are not buying it leveraged. Don't ignore that. You are not buying it leveraged.
But Rich, the USDT does have a GBP pair, right? Because that's what I use on Binance.
Let's have a look.
I don't use this screen though. I use the trade screen and it comes up. So it's weird that when you press that button, you can't see it. But if you go back to the trade screen that you were just in, there is a GBP and USDT pair. It never shows up there. That's why I never use that.
Okay. Have a look.
So
Rich, if you were going to do an instant purchase, would you click on market rather than limit?
No, just why is that there? ADA. Yeah, it's not coming up with USDT against it.
That's so strange. I usually just put GBP in the search button, in the search bit. I don't even use the fiat tab.
Yeah. Limit or market, you could buy it right now, or market, yes, you could. Basically, when I always do it on limit because it's the price it was last stated, or you could just go now and fill it straight away. But yes, you could. Why is that then, Tasha? So I wonder if I go GBP up here. But as people got the concept there of you have to sometimes go through another coin in order to get what you're after. So again, let's not get maxed out by everything on that page. Just go through. There are some brilliant buying. As I say, I'm not going into in depth here. There are, fuck me, there's 1,001. Yeah, it's not giving me a USDT from GBP. Can't do it. Yeah. Right, the next thing I want to show you, so now we've bought them, is staking. Okay, people are like, well, what's staking? How can I do that on here? Now, I stake the majority of my Bitcoins on BlockFi, which we'll go into a moment, but on here, you can stake as well. So left-hand side, you'll have a tab which says Earn. Okay, again, ignore all of the others. Okay, go and do some research if you want to use them. I'm showing you what I use to get myself around here. It will bring you into this page here, and you can look at Binance staking products. Okay, and it will give you the list like so. Now, these will sell out, okay, especially your attractive ones like Polkadot. They're offering 15%, okay? As you can see, it's immediately sold out. You can get notifications to tell you when these go on sale, okay? I get my notifications through Blockfolio. So if you're part of Blockfolio, you can get notifications through there. And it will tell you, staking of DOT offering 15% goes live at 12 noon, okay? But I mean, I tried to do one for EGLD at the weekend, and it went live at 12 o'clock, and I was on at 12 o'clock. And by the time I literally refreshed the screen, it had sold out. So this is where it is though. ADA, which is probably the most common one that you'll see, at the moment they are still offering 30-day staking, 60 days staking sold out in 90. But you're getting 5%. Now 5% you might think, oh, it's hardly anything, but it's free money. You may as well have it. Now, what you are doing is you're locking those coins up for that period. Okay, so you can't then, so let's say that spikes overnight tonight, you cannot now sell them. So, you know, I have 2 batches of ADA, which are locked staked. Okay, I cannot touch those because I have them locked. Yeah, so again, for 30 days, I wouldn't necessarily worry. When you're going for a 90-day stake, maybe that's a small consideration that you've got to make. And that is the staking within Binance. Okay, when you do that, how you physically do that, you would simply go on to, let's do it as ADA, 30 days stake now. Okay, it's locked staking, it's telling you it's for 30 days. Okay, I've only have 34 now because the rest of mine is locked up, but you need a minimum of 5,000. So this would not allow me to stake that 34. So you've got to have a minimum figure, and it will tell you what that is there. You do that, it will then lock it up. Okay, so I would be locking it up on the 3rd of the 3rd, and it's not available until that day there, the 1st of the 4th. Sorry, the interest date and the redemption date, the 4th of the 4th. Yeah, that's it then staked.
And the reason it does that is because it's then no longer required to validate because it's extended the time period where it needs to do that. So that's why there's set periods for it. Yeah.
And then you can do obviously there's DeFi staking as well, if you have any of those. Okay. Okay, so that is the basics of staking on there. Now, like I mentioned, I stake mine on BlockFi. Okay, so my bigger coins on BlockFi. Let me just quickly log into. I want to show you this on here. Because the question with BlockFi is, if people have Ethereum on here, do I have to go back to an exchange to turn it into Bitcoin? And the answer is no, you don't. Okay, so this week I moved a Bitcoin, one entire Bitcoin into Litecoin. Okay. I did not leave this panel to do that. All you do there is, so say you have Ethereum, which seems to be where most people will go. So you see the majority of mine here is still Ethereum in here, Ethereum to Bitcoin. You simply go to trade. I am selling Ethereum to Bitcoin. Maximum amount, hit the button. So I've never left this platform. Yeah, so that was a question that I got asked. You never need to leave. So on here, it's staked, but it allows instant access. They call it instant access, but it actually takes you 24 hours to get it out. 24 hours has actually saved me a few times, which is quite funny. If you look down here, I try to take out 50 Ethereum. I then cancelled it the next day when it moved the wrong way, okay? Because it kept it, but had it given me instant access, I would have spent that. Took out 75, I cancelled it. There's my interest payment for this month, and then I traded out Bitcoin to Litecoin, and I actually took out 75 Ethereum earlier on. You get 6% for Bitcoin, you get 5.5% for Ethereum, you get 5.75, I think it is, for Litecoin. I may have those subtly wrong, but it's certainly around that figure. Does it tell you on that page? No, it doesn't. So that is BlockFi. Right, last one I want to talk about here is lending. Okay, I spoke this week about you can now borrow against your currency. Okay, so I'm going to try and do this with a right. So this is my phone that you see there in front of you. Okay, so if I open my phone up, we're in my phone right now. Okay, we've got to be in my phone for me to show you this. So what have I done? Aave, or Aave, AAVE, is a lending DeFi platform. Okay, now this means that I can borrow against, effectively how you take a mortgage out against your house. I am using my crypto as collateral and I'm borrowing against it. Now, what's the benefit of that? I still own the 75 Ethereum, okay? But I've now got another 25 or another 20 or even more than that. So what we'll do is we'll enter it. So let's just enter this app. It will ask me to scan. Oh, you have to use a Mu wallet because I'm doing this with Ethereum. So again, this is the faff of having another wallet, okay? But it's the price you have to pay, okay? Okay, so I now have 75 Ethereum in my Mu wallet here, okay? So if I now put my scan QR code and I scan that voucher, it will now connect the two. So in Aave, it should show is it connected? And I think I cancelled that screen a bit too early. Right, there we are. So it's showing the 75 in my Mu wallet. Okay, so it's showing that I have 75. So I can now go to borrow. And I want to borrow, I can borrow anything, but I want to borrow Ethereum. So I can borrow Ethereum at an interest rate of 1.66. Yeah, I can borrow up to, oh, it's lost the 2 seconds. Let me come back on this.
Is that 1.66 a month, Rich?
No, per year, annual. Exactly, it is literally as long as. Now, again, none of this is advice, and obviously you can be liquidated for doing this.
As long as it doesn't drop in price, you're all right, aren't you?
Well, that's why it's very clever. It only allows you
It puts in a margin, does it?
huge margin. Right. Right. 75 Ethereum. I want to borrow at, you can stable it. So I can say, right, I do not want this to move, and they'll offer it me at 5, or it can be variable at 1.66. But I'd say the past 30-day average, it's been 2.3, so it can move. Okay. I'm trying to find out where the page I want to show you. Right. Right, here we are. So I can take out a maximum loan to value on my 75 of 80%. It will liquidate me if it drops and that loan to value gets to 82%, 82.5, okay? So obviously you do not want to be anywhere near that. So on a 75 balance, okay, I would, right, so let's actually do this. Let's put my 75 in there. Let's just do it, shall we? Right, now it's not going to let me do max. It won't let me do max, by the way, because of the fees. So there's going to be a gas fee involved in that. Please submit deposit. I'm going to try and put it all in. Deposit now. Okay. Please refer to the app there for additional details. Fee. So 33. It's going to take 3 minutes. It's going to take that to do it. So I want to confirm that. Confirm that. Deposit error because I haven't left enough for the fee. I go show error. Yeah, I haven't left enough for the fee. But in essence, what I'm doing, I'll not do that now because it will take 3 minutes to go in there. But what I plan to do here, which I've already done once and I'll do it again, is I'll take 20 Ethereum from this. So I'll borrow 20 against my 75. So the benefit of that, I still own the 75. So if they're going to double in value, I still own them. I haven't had to sell them to buy another currency. And I am averaging in now to ADA and DOT, are pretty much the only other two that I'm averaging into. So I own a significant portion of, and a bit of BNB, which is Binance Coin, but I'm averaging in with borrowed money. So I haven't had to sell my Ethereum in order to buy more. I'm averaging in by borrowed money. It's a complex thing. You are leveraging yourself, but at me taking 20 against 75, okay, I'm taking less than 25%. I'm borrowing less than 25%, where I can borrow up to 80% of that 75, but I still own that 75. It can be paid back at any time. Okay, so at any point I can just say, I want to pay back the 20. What I can do is I don't have to cash in what I've spent that 20 on. I can just simply come on here and I can say, take 20 from the 75 that you currently hold. Okay, and that then pays off my debt, and that's me then debt free. And that's what Aave, this platform is. Okay, as I say, you've got to use a Mu wallet, you've got to link them. That's, in essence, I've just shown you how to do that. There's no more complex nature to this. It's a very, very simple, straightforward thing to do. Simple scan QR codes from that. It's to move Ethereum around. Aave is built on the Ethereum network, hence why it works best to move Ethereum around, and you've got to connect a new wallet, which is an Ethereum wallet, to that. So that is that one. Covered the staking, covered BlockFi, covered Mu. What else did I have open to talk to you about? Bitcoin staking. Right, final one I wanted to talk about is, people ask me, right, when you're going to get out. So you know my play at the moment is between, and I still believe in it, and you'll get 1,001 different FUD videos on the internet. FUD is about, is Ethereum failing behind Cardano again? So I have exposure to all. So I have exposure to Cardano, to DOT, and to BNB, which are the ones which potentially may not dethrone it, but they are doing a relatively similar job, but for less fees. As Marcus spoke about earlier on, gas, the high gas fees on Ethereum. But Ethereum is still #2 in the market share. Now, I think this market cycle, if we look at a chart here, but not the Aave, not the Morningstar, where is it? Oh, I think I've screenshotted them. Just looking for the stock to flow ratio. Right, hopefully you've all seen the stock to flow ratio before. If you haven't, please do go and look it up because it follows relatively close. And this new orange dot is the newest one that's just been printed. We call it printed, it's been put onto the chart, this new orange one. And again, it's shown that it's following the line relatively closely. Now, everybody, like I've said a few times, needs to plan their exit. Okay, there's many people like you, Michael Sayers, like many others who say they will never ever sell a thing, but you'd be foolish in a way not to look back at history. Okay, So let's have a little look what's now. This cycle is completely different. We've got institutional money coming into this. We've got very, very strong hands coming into this who will never, ever sell the coins. The altcoin rally hasn't really begun yet, okay? And at the minute, when we've got a large market share still being held by Bitcoin, it hasn't yet moved to the altcoins, which it will do. But let's have a little look at this. What happens? We'll follow this blue line, this thin blue line here. So if you look back in time, post halvings, the market rattles up. It rattles up. It blows off top. It's a classic blow off top. Okay. So we look here. We look where the line is, and the line is roughly around the 100,000 mark. So I've openly said that my play at 100,000 is I'll start scaling out. So at 100,000, I'll probably start selling to a stable coin, so to a Binance US dollar or another stable coin at around 100,000. So I will start scaling out of all cryptos at that point. And when I say scaling out, probably selling 20% profit at that point, and then selling 20% probably at every 10 to 20,000 as it rises, because I expect it again to blow off top. And we may get the blow off top maybe to your 200,000, it may be to your 250s, your 300s. We've seen all of these predictions put out there, but it will rapidly come back down to the 100. And the reason for that is when it starts to blow off top, let's look at history. Let's look at last week when the market started to crash. What is the first thing that happens? Every single exchange goes down. Okay, and it will happen again. And by leaving it and trying to pick that top, you will ultimately be far worse off than if you just scale out in elements on the way up. But have a plan to do to do that. So I do expect a blow off top. And if we look at these charts here, which I've got, which is exactly that, from the halvings to the blow off top, halving to the blow off top, halving, planned blow off top. Now, as I say, it's completely different money. And like we've seen here, the rainbow chart with the rainbow, which I know Tom absolutely loves, which shows a lot of credibility. But this red section in the rainbow logarithmic chart shows when it is overbought. Okay. Now that currently sits between kind of your 84,000 mark all the way up to about 220 odd, 270,000. So again, once we're in this around 100,000, I will start to scale out. Okay. Now I don't think this pullback is anywhere near over. So this is where we are now. And as you see, we had this one red bar last week, and the world shat itself. Why did it shit itself? Because you got a load of people now jumping into crypto who bought in the 50s, okay? And there's nothing wrong with buying in the 50s at all, as long as you're cost averaging into it. And then all of a sudden the market crashed. But we've only had 1 week of downturn, where if we look back in time, look, massive week of downturn. How many weeks did we have there? Look, you know, it follows that we are due a large pullback. I personally do not think this is over. Okay, it may be, don't get me wrong, because we're in a different circumstance here. We've got institutional money that's poured into this. We're in a completely different place. Okay, but I guess the crux of this is have a plan to exit. Don't be greedy. Don't try and pick the top. The exchanges will bite you in the arse, and the exchanges will fail you. Okay, so have a plan and stick to that plan. And once you exit, like me exiting Rocket, never look back. Okay, you've exited, you're at profit, you've done well, and then live with that. If it carries on going up, so be it. Don't then FOMO back in. Exit for a reason, and that reason is a plan that you've made for educated and on an educated thesis yourself. But like I say, all I'm doing now is the standard plays: Ether, DOT, BNB, and ADA. I think a lot, and I feel that we have until back end of this year, early next year. I would like, if I'm brutally honest, I would like to be out of it all by September. I don't think we're going to see that area by September. And when I say out of it all, will I be out of everything? No, I probably won't, but I'll have scaled out a significant portion of profit, and I'll be waiting for the cycle to repeat itself in some form, or I'll be looking at the other things. So at the minute, I'm very heavily into the kind of the smart contract piece, the Ether, the DOT, the BNB. I'll then be looking at maybe the privacy coins more than, maybe look more at the privacy coins there, or maybe the lending platforms like Arv, which will start to come out the woodwork. But again, like I say, don't go all into crypto. Dangerous game. It's a portion of your portfolio that is very important that you have exposure to. And it's a small percentage of that. Or it depends on your risk appetite. Mine's a much higher percentage now of my portfolio, but I, once again, suggest that everybody has a exposure to cryptocurrencies in this current market. That is it. We've had a long one tonight, hour and a half there. I haven't answered all the questions. If I see Mike on there, Mike wanted to chat about watches. I tell you, Mike, I could talk watches all day long and investment watches, but I don't think much of the other crowd would be as interested as potentially you and I. So I'm more than happy to have a chat about investment watches at another time. Because they are, Christ, you pick them right, they're doing well. Oh, all they ever. But again, you're parking the money, which is always something to consider. Guys, we'll take 2 minutes.
What about the ADA fork, Rich? Do you think that'll cause? Because I tried to look it up to see what happened in the past.
So I cost average. When I say cost average, I put a small position. So I have quite a big position in ADA anyway. I borrowed and then I bought some the other day because it was actually shown that it was going to continue in a bull trend, continue to rise. I would anticipate that post fork you would get a pullback, and it's pulled back quite a lot today. My buy price for ADA ideally. I'll give you Dan's just said he was going to ask about watches as well. How do you get access to BTC in BlockFi, or is BlockFi another version? 2 seconds. I think we will see a pullback, but I also see where's the buy price. To be honest, in the ATP mark or down to the $1 mark. Hey, if it continues to drop down there, from there, I'd still be happy. I'd just be cost averaging. But I do see the fork, post the fork, it having a kind of a pullback. But it's one of those things nobody knows in crypto. It really is that. It is one of those things. I mean, you've got the Berlin fork in, I'm going to say April, the Ethereum Berlin fork. You know, history says that post that you'll get a pump pre-fork and then you'll get a drop post-fork. That's what history tells us. If you try and play, for me, it's a cost averaging game. Don't try and pick the top of the bottom. But a lot of thanks there, Marcus, for you and your in the chat here. I can transfer GBP to the USD. I don't use the fiat tab, just search GBP and it's at the top one. I'll have a little look at that, Tasha. I'm not sure why it didn't come up. Right, Kat asking Binance and BlockFi. They're two separate entities. So you would basically go on to, in order to do that, you'd go on to BlockFi and you would hit deposit. Okay. You would hit deposit and you would hit BTC and it would give you an address. You then go on to Binance and you go on to withdrawal and it will ask you for that address. Don't try and write it down on a piece of paper and then copy it in here. Always copy and paste it. If it's on your computer, don't try and, because you'll get it wrong. The address has to be checked and double checked. But you are depositing, it will give you a deposit address. Go on to Binance, withdraw BTC, and it will give you a space to put the address. And then that will send it to BlockFi, where you can gain the interest on that. Rocket hit $45. Well, there we go, eh? So that must be about 70% in one day. What can I say? At least it was a good pick. So I got my analysis right on that one. Just took a little bit longer to come to fruition. Right, quick one. In fact, I'm not going to do a quick one. Buy price on ADA now, Steve. If you get it in the ATP mark or below sub $1, ATP is a good price, okay, for ADA on that one. And I think you'll easily get a double out of that relatively quickly. But for me, I'd be holding it for a little bit longer. I feel let's have a watch discussion. Maybe I'll do an investment watch one separately and get people on to talk about watches, because it's quite an intricate thing about watches. People, you've got to be able you've got to be able to pick wise. What was, yeah, I'm not going to, we'll talk about that. Your ones which will only really make money on watches are your Rolexes and your Pateks, your APs and your others. They're nice watches, but you're never going to make anything decent on them. Guys, I'm going to leave it there. The website, wealthcreation.group, will be going live within the week, okay, which will have a load of new stuff on there. So log that one as a favorite in your phone. So yeah, we'll be going live within a week and you'll all know about that. So that'll be wealthcreation.group. I think that's it. I hope that was useful tonight. I think we've had a lot of information tonight. And I hope I haven't maxed you all out. Marcus, thank you once again for that brief. That was brilliant. Hopefully there were some nuggets for everybody in that to look at where you are, whether that be ETFs, whether that be an understanding of blockchain, whether that be an understanding of your crypto portfolios and what potentially you can do with them. Any questions, do shout, drop them in the Facebook group. Oh, by the way, talking about Ether, do you see Amazon tonight have put their AWS, their Amazon Web Services on Ethereum? So if that isn't a positive sign, then what is? Ladies and gents, I'll bid you a good Tuesday night. Speak to you all again soon.
Nice one, Rich. Cheers, mate.
Cheers, James.
Cheers, Rich.
Thanks, Marcus.
Bye-bye now.
Thanks, Rich and
Thanks,
Marcus.